Good morning and welcome to the THARISA PLC investor presentation. Throughout the recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it received in the meeting itself. However, the company can review all the questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to CEO Phoevos Peroulis. Good morning to you, sir.
Good morning and welcome everyone to this very exciting presentation that we would like to share with you this morning. And it's the phased transition to underground mining. As you all know, we've been an open cast miner for the last 15 years of our existence. And as we deplete our open pit resources, we transition from the open pit and West Mine to start with to underground mining. And what's very exciting about this is that we've been studying and contemplating this for a number of years. We'd always planned to go underground, but it gives us the opportunity to redefine our resources, to innovate again with purpose, and to empower futures. And so this really is an introduction from my side, but I'm joined by my colleagues. To my left, Michael Jones, our CFO, whom you know well. To my right, Vulela Makuni, our Managing Director of THARISA Minerals, the THARISA Mine, and Roy Murley, our Executive of Operations. So when we look at the next slide, Ilya, unlocking multi-generational value through integrated mining. So we have a vision which sees a fully integrated complex where we unlock value beyond the world-class open pit that has proven its resilience through the co-production of platinum group metals and chrome concentrate through very, very volatile commodity markets, geopolitical storms, and many headwinds. And through this, over the last 11 years, we've remained profitable. We've been able to distribute dividends to shareholders, and it really has proven the business case of the THARISA model. By going underground, it allows us to continue the sustainable delivery of this co-product business model, but on a more efficient, more environmentally friendly and cost-effective manner. If we look at our ethos of empowering futures responsibly, we really do believe in creating opportunities for people, for the communities within which we work, and for generations to come. So unlocking this multi-generational value that we've been given at the resource at the THARISA Mine. Safety is a key and core value of ours, and we're very proud with an industry-leading safety standard of 0.02 lost time injury frequency rates per 200,000 man-hours worked. We employ a vast number of people, including contractors across the group now, and that number is just over 4,800 people. And importantly, we all have invested consistently and continuously through the cycle in our business. To date, we have invested $832 million, but importantly, we've also, through our capital discipline, returned some $115 million to shareholders in the form of dividends. So when we look at the guiding principles of what drives us as a business, we have safety at the core of everything that we do, and it's entrenched in every decision that we make. We strive for superior returns for our shareholders in that multi-disciplined capital discipline approach or multi-pillar approach. We committed to the upliftment of the communities within which we work, and we also conduct ourselves with integrity and honesty. We have given a commitment to reduce our carbon footprint by 30% by 2030, and we're well on track to achieving that. And ultimately, we do take responsibility for the effect that our operations have on the environment. And I think you'll see today that with the unique approach to the underground mining, we challenge convention and we use technology and innovation to differentiate ourselves. And these are the guiding principles of our business. For those of you that are new to the THARISA story, we're situated in the largest geological complex for platinum group metals in the world, the Bushveld complex, hosting more than 70% of the world's platinum group metals. And you'll see that our second development project, the Karo Platinum Project, is situated in the second largest geological formation in the world, called the Great Dyke of Zimbabwe, and we're in the middle chamber at the Karo Platinum Project. If we take a zoom view of the southwestern limb of the Bushveld complex, you can see that we're well situated in PGM and chrome country, and we have the benefit of co-extraction through a very unique and innovative approach of mining the multi-layered middle group reef horizon for both PGMs and chrome concentrates. So when we look at our aerial view of our operations, you'll see that we currently operate 3 open pit mines. The East Pit, the major supply of our run of mine to our ROM and processing facilities, approximately 70 to 75% of our production comes out of the East Pit. The West Pit and the Far West supply the balance of the ore. You'll see from the team in the video that we'll share with you, we're proposing to start, and we have indeed started with early work preparation and make safe for the portal development in the West Pit, and ultimately transitioning to a dual portal access from the East Pit as well. So when we talk about a smarter way forward for long-term mining success, we have the benefit of starting a new mine and accessing new technologies, artificial intelligence, smart equipment, and installing infrastructure that future-proofs our ability to extract the raw materials, the run of mine that we need on a low cost, safe, and efficient manner. And this really transitions beautifully from our open pit mine, which has proven to be a low cost supply of run of mine and chrome and PGM concentrates to the world, and allows us to sustain that momentum on, we believe, a more efficient and more cost effective basis on a mechanized board and pillar on reef development, which the team will run through in more detail. But I think as an introduction, before we move on to Roy and Vulela, we'd like to share an underground video summary of what it is that we're embarking on during this transition to underground.
THARISA is a globally significant, vertically integrated, low-cost producer and developer of critical strategic metals, with multiple assets located across Southern Africa, with the flagship location being the THARISA Minerals mine situated 45 kilometers east of Rustenburg. The THARISA mine is extracting ore from 3 open pits, namely the East Pit, West Pit and Far West Pit, and has started the phased transition to underground board and pillar mining operations, with make-safe development having already started in the West Pit, where the underground transition will commence. The mine is endowed by the middle and upper group reef horizons, with a total of 6 layers, the main reef packages being MG1 to MG4. These reef packages vary west to east. And for the underground transition, THARISA Minerals will be focusing on mining of the MG2 with an average reef thickness of 5.5 meters and MG4 with an average reef thickness of 4.5 meters. The width of the middling section between the MG2 and MG4 reef packages is approximately 10 meters at the portal and increases to an average thickness of 20 meters as the underground development goes deeper to the north. With innovation at heart, the pre-existing independent integrated processing plants produce both platinum group metals and chrome concentrates, operate in parallel, which allows for processing flexibility and production scalability. The underground expansion project was established to increase the life of mine development to access the multi-generational mineral resource base, enhancing operational efficiencies, environmental stewardship, and long-term value creation. The initial development is engineered on a footprint for 10 years of underground reserves, focused on the mechanized board and pillar mining of the MG2 and MG4 reef horizon layers, with the board and pillar layout to mine the MG2 and MG4 reef packages superimposing each other. THARISA Minerals' underground expansion is enabled by the shallow nature of its ore body, which enables more efficient and effective access with reduced development timelines as the focus is on reef development. This focus allows for ore extraction and infrastructure development simultaneously, minimizing off-reef development requirements. By ramping up underground operations from the West, Apollo, and East Orion portal complexes from 2031, reliance on the open pit operations can be reduced, as Apollo and Orion have been designed to mine 255 kilotons each per month at a steady state, with a total design capacity of 510 kilotons per month. Both portal complexes will achieve combined steady state by 2033. The Apollo mine will be developed first with 3 access points and an off-reef connection between the MG2 and MG4 reef horizon layers. The mine design criteria production is based on trackless mobile machinery capabilities for 10-degree traveling dip angle and a 5-degree side slope dip traveling angle, with stoping and development taking this into account and aligning with open pit production to maintain maximum plant capacity at 5.6 million tons per annum. The Orion mine is set for development to start in 2031 from the East Pit operations, which will also access the MG2 and MG4 reef packages. For the first 3 years, the ore will be hauled by TMMs, which includes LHDs and dump trucks, from underground to a ROM pad on surface and to the processing facility. And after these 3 years, a conveyor belt system is planned to replace the mobile machinery to convey the ore to the surface. Surface infrastructure has been added for this additional mining method, with essential services, workforce support, and operational hubs being completed before the implementation of board and pillar mining. As part of our strategy, THARISA aims to build up to a production of 200 kilo-ounce of PGM per annum and 2 million tons per annum of chrome concentrate with the mining of the Apollo and Orion portal complexes.
Back over to the team for the presentation now.
Thanks, Alessandro. I'd like to hand over to Roy now, who will run through some of the technical aspects of the underground mine.
Thank you, Phoebus. Good day all. A truly exciting journey ahead of us. Our proactive move to transition to the underground mining will secure long-term sustainability as a co-producer of PGMs and chrome ore for decades. Early work shown in the top right-hand photo focuses on stabilizing the high wall and enable minimal off-reef mining during the decline development. The 10-year DFS graph illustrates a decline in the open cast output, while the underground mines Apollo and Orion are set to reach full production by 2033. This supports and exceeds our future production requirements. Underground mining improves ore quality and metal recovery while cutting waste mining and diesel use. Mechanized mining methods enable leaner, cost-effective operations with smaller fleets and streamlined infrastructure. The shallow nature of our ore body reduces surface impact, energy use, and enhances safety, supporting long-term sustainability as well as our ESG goals. The geotechnical design focuses on roof support with strong pillars. As we know, our open pit are approaching the end of their economic life, driving a transition to a substantial untapped underground resource with multi-generational potential. This next phase of the mine development expands reserves beyond the current pit boundaries, enabling stable, low-risk production by tapping into an extensive underground resource base. The definitive feasibility study, or DFS, includes an updated geological model and additional drilling to verify continuity of the mining below the open pit boundaries. The database comprises of 639 diamond drill holes, totaling a staggering 80.6 kilometers, with 96 holes within the 10-year DFS footprint, identifying 60.7 million tons of measured and indicated resource at 1.71 grams a ton 60 PGMs and 19% chrome oxide. After applying modification, mining, and mine schedule factors, the estimate mineral reserve for the 10-year underground footprint is estimated at 30.4 million tons at 1.45 grams a ton 60 PGMs and 16.4% chrome oxide, classified as proved and probable. This evaluation and development process will continue throughout the life of mine. Next slide, please. On this slide, the blue solid line on the top illustration represents the previous indicated reserve, which has been expanded for the 10-year period in the blue area through additional drilling. We have a strong confidence in the ore body's consistency, with drilling being crucial. The Google Earth map below shows the UG1 and MG1 outcrops separated by the open cast pits. A high density of boreholes is visible, and including the in-pit drill holes and newly drilled ones in orange within the underground footprint area. The Apollo mine complex, with a phased portal development approach, enables early, safe, cost-effective access to reef horizons while minimizing off-reef development through the ground pillar. Apollo Portal 1 provides quick access to the MG2 reef horizon, followed by Apollo Portal 2 accessing the MG4 reef horizon. It's important to note that the MG2 mining will be leading the MG4. Apollo Portal 3 is planned for 2029 to accommodate infrastructure installation, and this allows the current open cast mining to be completed within that specific area. The infrastructure referred to includes conveyor belt systems, a permanent ROM pad, and the ore transfer system to the plants. Key partnerships is very important for us. Our business partners play a crucial role in advancing the underground phase by providing specialized mining services that enhance safety and efficiency in our operations. Trusted partners ensure projects are completed safely, on time, and to the highest degree of quality and standards. Additionally, our partners supply a comprehensive range of explosives and accessories for blasting, alongside high-quality engineered mining and construction equipment across South Africa. Thank you, and I will ask Vulela to continue with the presentation. Thanks, Will.
Thank you, Roy, and good morning all. The underground transition will be aligned with regulatory requirements. As mentioned earlier on, the early works commenced in June 2025. This part of the work included the high wall safe making, the above ground civils and infrastructure, the access to the portal, which include water handling facility, and that work is currently underway. We have de-risked the underground transition because the environmental, social, and technical requirements are aligned, positioning THARISA to execute the underground phase without any regulatory delays. We have also created a long-term value by regulatory alignment that underpins sustainable production, ESG credibility, which allows us to operate within the rules. The Section 102, the water use license, and the Chief Inspector of Explosives approvals are currently progressing, while the specialist studies, the public participation is already completed, and this ensures full compliance. Thank you. Our portals are located and sequenced strategically to ensure that the Apollo at the west and Orion in the east is around the key infrastructure, which is the processing plant, the water supply, electricity, the tailing storage facility, as well as the waste rock dumps. The rollout starts at west with the highlight of the key important dates, as you can see on the slide, which is Apollo that is starting, the ramp up of Apollo, the steady state, which is then followed by Orion, the ramp up of Apollo, as well as the combined shaft complexes that are going into steady state later on in 2031. This is not just a mine plan, it's a blueprint for sustainable extraction, balancing economic efficiency, the technical ability, the social responsibility, which underpins THARISA's ability to deliver long-term value while reducing risk exposure. In terms of the choice between the different reef types, the MG2 in green and the MG4 in blue, there were a couple of considerations that were put into place, but the one to highlight it is the mid-link, which allows us to mine geotechnically safe, the mineralogy and the grade that drives the prill split, as well as the ton per area, which is giving us the reef width, as well as where the volumes are coming from. The next consideration was the kind of mining that we opted for, which is the mechanized mining methodology. The consideration was efficiency as well as safety. As mentioned by Roy in the earlier slides, we have chosen partners that have got a very good track record in the area of mechanized by the kind of machines that you use, which allows us to remove the people from the risky area because of the use of the mechanized mining equipment and mining method. This is going to be done by applying the skills of the current workforce that is working in the open pit. We have already started with the work of reskilling and retraining these people so that they are ready for the transition into the underground. This is supplemented with the help of our service provider, which has got a training facility with a very good track record that is going to be upskilling the community. And this proactive labor transition allows us to reduce social risk, protect community trust, as well as ensuring that we're within our license to operate. We have planned this underground so that we deploy the smart mining, connected mine, and people by introducing the backbone that allows us to use technology. The benefits of this is the ventilation safety, which allows us expansion certainty because it is purpose-built airflow and heat control systems that protect workers while enabling phased underground growth, as well as optimized cost. Hence, we're making use of the vent-on-demand program. In terms of how we deploy electricity, we have allowed for power redundancy in order to protect our production by making use of reliable electrical backbone, which a standby capacity secures uninterrupted operations and shield returns from downtime risk. This by making use of the ring feed method, so that when one area of the supply fails, the backup kicks in immediately. And then, as mentioned earlier on, the kind of fleet that we deploy is from service providers that have got a proven track record on mechanized TMM fleet, which secures safe operations, reliable and predictable cost, as well as operational consistency across all our operations. When we plan for the water, we have considered 3 areas. The one is the source, the recirculating capacity, and how we discharge the water to ensure that we protect the ecosystem. We've got a reliable water supply and risk control because we've got an integrated water management system that secures sustainable water balance across all catchments, and the infrastructure is designed to withstand extreme weather storm events, safeguarding both operations and the environment. The hydrology is strategically built into mine planning and the facility layout, optimizing water flow, storage, as well as the use. This alignment reduces operational risk, supports continuous mining, and ensures regulatory compliance. And most importantly, on this slide, we hold environmental stewardship and sustainability close into our hearts because the site hydrology zones are engineered to minimize discharge to the Stetrom River, which is a protected ecosystem downstream. We are also using advanced systems to deliver efficient water use, reduced environmental footprint, which ensure compliance. Thanks. Yeah. We are championing sustainability across our operations in line with our visions, as mentioned by Fivos earlier on. The socio-economic value creation, which ensures stability and trust. By this, we ensure we do significant contributions via the taxes and community investment, which underpins our license to operate. Environmental stewardship ensures operational resilience in terms of water security, the climate action that secures long-term operational sustainability. From an ESG alignment point of view, we're ensuring strong ESG performance to ensure investor confidence. These are just some of the examples that we employ locally because 43% of our employees are from the host community. We also ensure that we are advancing gender diversity. 26% of our employees are female. We're supporting education and skills development. We focused investing in training, in learnership, academic sponsorships, producing some of the brightest professionals in engineering, safety, and environmental management. For example, the lady that you see on the screen is one of the students that is a top achiever who is a child to one of our employees that we have sponsored. We are also empowering local business partnership to ensure local enterprises that provide jobs, training, and supply development opportunities. These initiatives ensure that value creation extends beyond the mine and critical small business ecosystems. And lastly, on my slides, the introduction of the underground doesn't change any system in terms of our processing capability, because all the material that you're going to be from underground is going to be treated in our existing plants, which is the current Genesis, the Voyager, the Challenger, as well as the Vulcan complex, because the reef type and the mix doesn't change any significant. Thank you.
Thank you, Vulela and Roy. delivering. So our objective over the next 5 years is to deliver on this expansion and the growth opportunities, which include technology solutions, which we've shared with the market, whether it be downstream beneficiation of chrome products in the form of grinding media or special alloys, and our downstream PGM beneficiation through our chloroplast process to refine our PGMs. And importantly, the growth in Zimbabwe at the Karo project. I think it's important to note at this juncture that while we're embarking on two large growth opportunities, the one is a transition and is natural in the form of progressing from open pit to underground, and Michael will unpack what that means from a capex profile, and it's not dissimilar from what we've been doing over the last decade, with dedicated teams focused on the underground mining, with veterans coming out of the underground board and pillar mechanized mining. To my right, Roy and Vulela, we have a dedicated focus team that are geared to execute and deliver on the THARISA mine expansion. Similarly, in Zimbabwe, while we're under construction and building our processing plant and infrastructure, bringing water and power to site, we have a dedicated focus team. So the risk of delivery, different profiles, different risks, and I think we have more than adequate resources to execute both simultaneously. I think moving on to the Pearl split, and the key of the middle group Reef Horizons, which has really been unique to the THARISA mine, is that we have an enhanced PGM basket price. Current spot prices, I think as at the 1st of October, for the open pit Pearl split at around $2,100 per ounce, with a mix of just short of 50% platinum, palladium at 17.5%, and I think almost an industry-leading rhodium content of 10%, minimal gold, ruthenium at 17.5%. A lot of interest in ruthenium with data storage centers proliferating and the demand and requirement for storage, and then iridium, crucial to the hydrogen economy electrolyzers going forward at 4.7%. When we go underground and we transition to MG2 and MG4 only, the value difference is minimal at some $2,087 on a like-for-like basis on the 1st of October spot prices. But what you will see is an increase in our platinum content from the 49% to the 55.3%, really to the detriment of palladium, which drops to 13.9%. Rhodium still at a very pleasing 9.4%, ruthenium at 16.2%, and a slight increase to iridium at 4.9%. I think what's key here is that the chrome content and the consistency of the feed, as Roy and Vulela mentioned, will ensure an increasing production profile. And as we look at that bar chart going over the next 10 years, forecasting our annual production, you'll note that the red bar being the PGM production increases to beyond 200,000 ounces of PGMs as we integrate to a fully underground mine by 2033. And similarly, chrome concentrate exceeds the 2 million tons from the 2033 point onwards. So really pleasing profile. And I've always stated that we believe that this mine on a sustainable basis should deliver 200,000 ounces of PGM and in excess of 2 million tons of chrome concentrate. And with the consistency and the quality of underground mining, we will achieve that in this next 10-year horizon and continue beyond that. I'd like to hand over to Michael now to touch on some of the numbers.
Thank you, Phoevos, and good morning to our audience. One of the core philosophies of THARISA when it relates to capital is our capital discipline and our allocation of that capital, where we have continued to invest in the sustainability of operations throughout the commodity price cycles, the growth of our business, as well as ensuring that we give a return to our shareholders. We have long planned to transition to an underground mine from the open cast, and the implementation of this plan is very much in line with that capital allocation and the discipline associated with it. In that, We'll firstly be investing in sustainability of operations. So as mentioned, an additional 60 plus years of mining, as well as ensuring long-term returns to our shareholders, sustainability of those returns. If we just touch on some of the numbers for the moment, and these are just the key numbers, the capex for the Apollo complex is sitting at $363 million. And when I'm talking capex in this context, it is the spend from the time the development commences until such time as that complex achieves steady state production. So in the case of the Apollo complex, steady state 255,000 tons per month, and the plan is to achieve that in Q3 FY 2029. There is then a sequential development into the Orion complex, the capital for the Orion complex, $184 million, and commencing in Q4 FY 2030. Just if we look at those numbers though, just to note that those are today's value numbers, so real value, real numbers. You'll notice that there's quite a difference between the spend on the Orion complex and the Apollo complex. Some of that is due to the, I'm going to say, the smart approach to accessing the Orion Reef Horizon. The other one is that, as Willela mentioned, significant spend on infrastructure that is necessary for underground mine, and it's a once-off cost of that development. Peak funding coming at a very reasonable $173 million. And that's really on the back of the on-reef development, where after the first 30 meters, we start accessing reef on the development slopes, and that will then be processed through the plant. Just to touch on that number though, that peak funding was at the time of the definitive feasibility study. At that point, the PGM basket price was about $1,633 per ounce. Chrome price is very much aligned where we are today, between $280 and $285. And that still achieved an internal rate of return for the project that exceeded our hurdle rate of 25%. If you then move forward to the very favorable recovery in PGM prices to just over $2,100 an ounce as of today, chrome price is still very much aligned. That would of course reduce the peak funding requirements and also enhance the overall project IRRs. Let's touch on the mining cost, inclusive of capital development. That comes in at $40.8 per ton, very much in line with our current open cost mining. But if you look forward, we would expect to see an increase in your open cost mining costs as you go deeper, additional waste to be removed and additional haulage distances. And I think that the underground mining will ensure that we remain in the lowest cost quartile of producers going forward. The question, of course, comes in as to how we're going to fund this capital project. And we have cash on hand at 30 June. That's the last interim reporting date we disclosed the cash. That is a group cash number of $165 million. Not all of that is available for the underground project. We are committed to various beneficiation projects at Arco Metals, Karo Platinum, the Zimbabwe development project, as well as long-term sustainable battery storage, Redox 1 projects. So what we did is we put in place a bespoke funding package for the underground development. It is a corporate facility, so it's not your traditional project finance, totaling $130 million. With an accordion, we can access a further $20 million should it be required. Structured as a term loan, $80 million, a revolving credit facility, $50 million. In addition, while we are going with a mining contractor model, when we looked at the economics of the contract, it made sense for us to effectively procure the equipment necessary for the underground fleet, and we are busy in the process of securing $45 million of asset-backed financing. The next slide is a much more busy slide, and I'd probably just like to focus on the dark red bars there. This is the monthly capital spend as we go through that transition capital. There you can see in the first place the spend on the Apollo project, that brief interlude in between, then sequential development of the Orion complex with a much lower capital intensity. The parallel line reflects the underground spend, the open cost spend on capex over the last 10 years. So looking at about $75 million per annum over that period. So just putting in context, the underground capex very much in line with the historical capital spend. We will, of course, as we transition from the open pit, reduce that capital spend as we reach the end of that life of mine, and we will transition that capital to be spent on the underground developments. We all know that mining is a capital-intensive industry. So what we've really looked at as well, just to give an indication of order of magnitude, is we looked at the last 10 years and said, what have we spent on capital, not only on the plant, but on the underground, on the open cast plant, machinery and plant, and that comes in about circa $625 million. So if you then had to take into context the $363 million for the Apollo project, the 184 for the Orion project, very achievable and manageable based on our historical performance. That is a very high-level overview of the financial information. I'd like to hand back to Phoebos.
Thank you, Michael. So just to summarize the key milestones and the deliverables for both the Apollo and Orion shaft complexes and development timelines, we anticipate first ore from Apollo shaft, this is development ore, in Q2 of our financial year 2026, so next year. Steady state achieved in Q3 financial year 2029, achieving a monthly targeted volume of 255,000 tons per month. The first ore from the Orion shaft complex will be in Q4 financial year 2031, and thereafter achieving steady state in Q3 financial year 2033. You'll note that the monthly volume is slightly lower at 210,000 tons per month, and that's matched to our processing capacity of 5.6 million tons. Having said that, the Orion shaft is designed to deliver 255,000 tons per month, so the opportunity for us to increase our processing capacity to 6.2 million tons is available to us, and it's a decision that we'll take closer to the time as we reach steady state for the Orion shaft. And ultimately, this will deliver more chrome tons and PGM ounces, and we believe will be a normal transition again into further processing capacity, as we will have the ability to mine and produce those extra tons from the Orion shaft. So in closing, really, we are powered by purpose. We believe in what we do. We believe in building projects, mines for generations to come. It's a natural transition for us to go underground, and it allows us, if you don't mind, thank you, the ability to maintain our lowest cost quartile position that we've managed to achieve over the last 10 years. And I think what's important, and maybe a differentiator, is that we've not been scared to invest in our business. In spite of the cyclicality of the commodity cycle, we've continued to have that discipline to invest in our business, to develop. And this really talks to our continued commitment to unlock the natural resources that we have the responsibility to develop and create a multi-generational opportunity for all stakeholders. And when we look at what this really means, why are we doing this? It's really because there's real value in the THARISA mine. So when we run an NPV calculation at spot rates, post-tax at a 10% discount rate, and those spot prices $2,100 per PGM ounce and $285 per ton, and this is over the life of mine, 60 years, we end up with a post-tax NPV of $985 million. So significant value that we're unlocking. And the THARISA mine really is the cornerstone of the multi-billion-dollar platform that we are building. And when we add the Karo platinum production, an additional 200,000 ounces to our book of PGM production, you can see how this scales very quickly within the next 5 years to be a significant producer of these critical metals and minerals that the world has realized are a necessity to transition to a future world. And we believe we are future-proofing our business with this smart approach to mining and resource extraction. So with that, I'd like to thank you all for your time and move over to questions and answers. So Ilya, Alessandra, over to you.
That's great. Well, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions. You can do so just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the company take a few moments to review the questions that have been submitted today, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we have received a number of questions throughout today's presentation. And Ilya, what I'll do is I'll hand over to you now to run through the Q&A, and I'll pick up from you at the end.
Thank you very much. Let me go through the questions as we come along. The first question here is on the output figures, which I think you addressed, but just to confirm, is it a combination of the two underground reefs, or does this also include the open pit when we reach the 2 million and 200,000 ounces on the chart?
So on the chart, it sees us achieving that steady state number of in excess of 200,000 ounces and 2 million tons at the point in time where we're fully underground, 2033. We'd like to believe that there's potential and opportunity to bring that forward, but at this stage, it's forecast to be achieved in financial year 2033.
Thank you. I know we spoke about operational efficiencies and why we're going underground and the benefits there, but maybe go into a little bit more detail now that we have the opportunity. What operational efficiencies and cost savings do you expect underground versus open pit, and how will these offset higher capital intensity?
The open pit, especially at depth, it is mostly driven by the volume of tonnage that you need to move, because we're currently mining close to 180 in terms of depth. So at this depth, you need to move quite a substantial amount of waste, which is where most of your cost is lying. As opposed to when you go underground, the amount of tonnage that you're moving, there's less waste because you're only taking away the reef package in the 4.5 and 5.5 meter mining height. So that's where most of the expense or the cost is lying, in terms of you need bigger machines for the open pit versus the amount of volumes that you're moving underground. Because most people will make a comment that open pit is waste mining, because you move most ways to get into your reef.
Thank you. Staying with the operations, I know we spoke about it in terms of the infrastructure that's required and the difference between these money that's spent on Apollo versus Orion, but could we maybe add a little bit more color and flavor as to what infrastructure really is required that's different for the underground versus the open pit that we currently have, and also the area that we've laid out for that infrastructure?
All right. So firstly, the infrastructure that we refer to for underground is, like we said in the beginning, first 3 years, we'll be hauling out our reef tons through trucks. And after 3 years, we'll install a conveyor belt. As we superimpose the two reef horizons, the MG4 and MG2, we'll be installing the conveyor belt systems on the MG4, which is on strike. The main dip conveyor will only be carried on the MG2 reef horizon, which is the lower horizon, and all trans will happen through all pass systems. We'll also have what we refer to roller feeder breakers at the stoping ends, which will reduce the ultimate blast fraction to a more palatable size in terms of ore transfer. So in terms of the infrastructure, one of the changes there would be then obviously the conveyor belt system that will be installed. Secondly, the infrastructure that we also install basically will be the transfer from the ROM pad to the plant, and that will also be done by conveyor system. In the beginning, in the first 3 years, that will be done by trucking, and afterwards will then be replaced by a conveyor system. So I think in essence that those are the major changes from open cast to the underground section.
So if I can perhaps just add, the question also related to the surface infrastructure. There'll be the necessary engineering workshops, change houses, storerooms and so forth that also need to be constructed, and of course some additional electrical work that needs to be brought to the mine for the power going forward at a future date. So those are just some of the additional infrastructure projects that need to be undertaken, and as mentioned, those would be for the entire mine and not just per shaft. So it's a once-off spend.
I would like to also add what Michael is saying. So part of the difference in terms of equipment, when we move to the Orion shaft, 18 of those trucks will be used and not additionally purchased. So as we install the conveyor system, those trucks will then move over to Orion. We'll also do some up-dip development to ensure that that cost is also reduced in terms of the Orion shaft.
Thank you. I know this is something we've also discussed with the analysts, and you did address it in your opening slide, Phoebos, on the financial side. But could you maybe highlight further what key risks you are seeing in THARISA moving underground and how you balance that with the company in totality?
So in fact, going underground is a risk mitigant. So when we look at the ore profile, the decline in production coming out of the open pit, this is our mitigation and our measure to sustain our production and in fact improve the quality and sustainability of our mine. So we actually see it as part of our risk mitigation strategy. Execution risk is a factor that the team have considered, and by assembling a team of veteran underground mechanized mining experts, we believe we've mitigated that risk as well. The studies have been comprehensive. It was an extensive program that was undertaken through various stages of studies, and I think we've ended up with a very unique, smart approach that allows early access to Reef Horizon. So it's very different to a vertical shaft where it takes many years to access the Reef Horizon. This is on-reef development. So we get access to early cash flows and manage that capital intensity over a longer period of time, but on a measured basis. So I think it's been precision engineered, as the team have said. We've managed the process very systematically and sequentially, with early works programs being undertaken, de-risking the project through all the geohydrological studies, geotechnical studies, as well as the geological confidence through the enhanced drilling campaign. So I think from an execution point of view, we're comfortable that we're the risks are well managed. And I'll hand over to the team if there are any other comments on the project risks.
The one that is coming to mind for me was the geohydrological work and how we deal with the water. Water is an issue, but the partner that we use to do the study is doing a work in a larger area than where THARISA is located. So we've got a bigger area in terms of understanding the behavior of the water. And our proactive approach allowed us to deal with it before, as part of the mining progresses.
You know, I might add just to what Lelas also said, and in terms of the smarter design, we looked at when we develop into the Reef Horizon through the boundary pillar, it is at about 2 to 3 degrees up, which allows us to mitigate the risk of water ingress into the underground complexes, and that adds just another layer of protection for water management. We'll then, after the crown pillar, go directly into the reef, as what Phoebos has said. So that's also one of the mitigations, as an example of what was placed into the risk register.
Thank you very much. Michael, question for you. I know you addressed the underground costs, including capital. Maybe if you can elaborate a little bit more on that and compare that to our current costs, and also maybe understand the difference between the mining costs and the processing costs. So just an understanding of where we sit on the cost curve, I suppose.
Sure. Thank you for that question. If we look at the costs at the moment, your costs for underground and open pit are very comparable from a mining perspective. As I mentioned, mining costs inclusive of capital development, $40.8 per ton. If we just look back at the September 2024 numbers, it was sitting there at about 40.3. So very much in line with your overall mining costs. There won't be any change in your processing costs. Those would be the same, in that you are processing the material and the same volume of material through the same plant. I think we are going to have a short-term impact is that on an all-in sustaining cost, you will be seeing an impact because you've got a higher capital expenditure. It is a capital-intensive project, albeit that the capital is spent over a period of 10 years. So that will have a negative impact in the short term on an all-in sustaining cost basis. If we were to look at ourselves though on a longer term basis, I do believe that we will remain in the lowest cost quartile. We are mining on a cost competitive basis, relatively shallow mining, the infrastructure is built, the plant is there, so I do believe that we remain in the lowest cost quartile going forward.
Thank you.
The processing costs, I think, are consistent. They remain the same. So there's no additional processing costs, approximately 255 Rand per tonne, based on our half-year results. And then in terms of the current open pit mining cost, in line with where we envisage the $40.8. I think key here is that that cost for the underground mining is stabilized over the life of the mine, because that includes your development cost and your reef cost. So I think a more sustainable cost, less inflationary or increase due to depth, haulage distances, and waste deposition.
Thank you. Michael, I know again you addressed this in the presentation with regards to the return that you were targeting at 1633, but we do have a question here with regards to what return profile are you targeting from the underground, and how do you expect the funding approach to impact balance sheet strength and shareholder returns? And I suppose that ties in with the second question with regards to how do you look at share buybacks versus dividends. So generally a question on your dividend, on your balance sheet and capital allocation.
Sure. I think if we look back historically, we have been very disciplined with our capital allocation, and we are in a net cash position as of today. Going forward, that is likely to change with the capital expenditure. But again, if you have a look at the debt that we're managing on our balance sheet, it is a very, I'm going to say, conservative level of debt. We're not overgearing the balance sheet to any extent with this particular project. I mean, this is effectively, we recently had $130 million of financing on balance sheet. We've accelerated the repayment of that and have the necessary facilities in place. So balance sheet strength, I believe, is still going to be a very stable balance sheet, a well-managed balance sheet, and we will continue to manage and the CapEx against the plan from that side. I also think that we also need to take into account that there are strong fundamentals for both the chrome market and the PGM market. They have been historically at lows for some time. We're now starting to see the fundamentals improving those prices, which will also impact favorably on our balance sheet in terms of cash generation. On the question of share buybacks versus the dividend, I think some of those are based on where we see the undervaluation of the company as a whole, and we then approach the board with a buyback mandate. We've undertaken 2 such buybacks. There's one that's currently still in progress, but it's really aligned with where we see the value coming through and it's trading at a discount. And we do believe that it's trading at a very large discount to the underlying value of the company. We do have a stated dividend policy of distributing at least 15% of consolidated net profit after tax. We will continue to review that, and we need to review that when we have a look at where the normal economics are of commodity prices, capital expenditure, and so forth. So that will be an ongoing review as we go forward.
Thank you. I have a question here. What does reef mean? But I think let's use the opportunity, Roy and Vulela, to discuss the reefs that we are currently mining, the co-product concept, and why we've chosen the MG2 and MG4. So I think maybe sort of highlight that, and hopefully that answers the question here from this gentleman.
Yeah, the reef is, we're currently mining the MG1, 2, 3, 4. It varies in thickness, just under 74 meters, the total package or the stratigraphy. In between these mineral hosting rocks, that's what reef is referring to. We've got some layers of waste. With the current open pit, we're mining the total package, but when we are loading it, we are loading it differently because we've made our plants in such a way that they can deal with the different mineralization in terms of the reef. When we then stack it, we then mix it, we call it blending, so that the plants that are predominantly for chrome will get a different mix versus the ones that are predominantly for the PGM, because we are a co-extracting entity. That is one. However, when we moved underground, we did a couple of comparisons. Do you mine one and one only, one and two? Eventually, the choice that you came up with, because it had the highest financial benefit, execution in terms of safety, was the mix between the MG2 as well as the MG4. There's a further discussion that as mining evolves, there might be other studies or methods that reveal that you can go back and re-extract the layers in between. So that's what reef is referring to, is the rock hosting the mineral that you're mining.
Thank you, Rolela. Piyush, I think a sort of strategic discussion. You addressed earlier that we have a mine on the Bushveld, and we also have a project up in Zimbabwe. And the question here relates to, can you talk to us how you think of the priority between two large projects you're undertaking and how you will tackle those, particularly if there are any changes in market dynamics?
Yeah, so I think we're in a fortunate position where timing is optimal, market sentiment around PGMs, the fundamentals on supply and in particular demand, growth around the criticality and the necessity for security of raw materials on a geopolitical basis supports our investment drive. As you know, these decisions take a long time. So we don't make an investment decision quarter to quarter. It takes on average 16 years to develop a mine from first discovery. As you will know, and if those who are new to the company, we started exploration in Zimbabwe in 2018, and we're developing now 7 years later, which is a relatively short timeline. And from funding completion, we believe that the timeline will be 15 months to first ore and more. So near production. And what's key around Karo is it's been de-risked, because as THARISA, we've invested almost $170 million worth of equity into the project, which has ensured that we've gone through the deep risk curve of establishing the site. Infrastructure is underway in terms of water, power, reticulation, and the civils earthworks are complete, with the majority of the equipment being purchased and being assembled as we speak. So it's not a case of priority, because we're actually executing the expansion at the THARISA mine as we speak, and it has been approved by the board and the capital is available. So I think it's key to differentiate the one from the other, that this is a transition and a natural transition for us at the THARISA mine, and it's business as usual, even though the mining methodology is changing, and it allows us many benefits that the team have spoken about, in particular cost control, quality control, safety, and sustainability of feed material for our processing plants. The exciting opportunity at Karo is that it's one of the only projects of its kind, open pit, large scale, tier 1 asset that has scalability beyond the 10-year open pit. And so we prioritize both in the sense that we think timing is key and critical, and sentiment around resource security and delivery of raw materials is very favorable and very positive. A year ago this time, it was a very different world that we lived in. PGM basket prices were some 40% lower than they are now, and the drive to secure supply of raw materials was very different. So I think we're in a different world, and timing in life is essential. And I believe we may be close to optimal timing on both fronts. So yeah, we see them as great opportunities to unlock value and double our production of platinum group metals within this 5-year horizon.
Thank you. Piyush, I'm going to ask you to close the session and then close the presentation. Thank you.
Yeah, well, thank you everyone for your time and attendance today. It's really exciting for us to embark on this journey, as Roy calls it, as we transition to underground at the THARISA mine. We have all the confidence in the world in the ability for our team to deliver on the project on time, on schedule, and within budget, and really cement ourselves in that lowest cost quartile position, which is really our focus, and it delivers those returns to shareholders and proves and has proven its resilience through the cyclicality. We can't control commodity prices, but certainly we can control our costs, our efficiencies, and the effectiveness within which we mine and operate. But importantly, the positive impact that sustained continuous employment opportunities, upliftment of communities, the ecosystem that's created around these mines that grow and develop over decades is really rewarding to all of us as we see the positive impact that our investments, through the support of our shareholders and stakeholders, regulators, government, afford these environments is really rewarding. And with that, I'd like to thank you all and wish you a good day further.
That's great. Well, thank you very much for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. On behalf of the management team of THARISA PLC, we would like to thank you for attending today's presentation, and good morning to you all.